After personally teaching thousands of traders, I found that people commonly identify support and resistance wrong, resulting in having too many horizontals, and your chart ends up looking like this.
Oh, hell no!
We all know someone who does this. If it's you, don't worry, you found the right place. In this video, I'm going to teach you how to correctly draw support and resistance levels. So first, let's start with the basics. Support and resistance are two foundational concepts in technical analysis. Understanding what these terms mean and their practical application is essential to correctly reading price charts. Take a look at this chart. Notice how price was trending upwards before it stopped and reversed to the downside. This is where we would consider resistance to have appeared. Because it rejected once, buyers are trapped at that level, and when price returns to that level, those trapped buyers will look to bail on their positions, creating downside pressure on price. This is what is known as resistance. However, resistance offers us valuable trading opportunities. First, we're going to mark it out on our chart so that when price does return there, we can be ready and potentially open a trade. Let's look at an example quick. The market came to our level, presenting us a short trade opportunity. We know that buyers that are trapped are looking to get out, and we can use their downside pressure to profit with a short. Typically, I draw these levels from the candle body open or close. Now, to cleanly draw out a resistance level, we have a few options. Visual people like to use the rectangle shape to identify a zone of resistance, not just one exact number. I usually just use a horizontal ray or a line. Typically, when I use the line, I also will select the magnet tool to snap my line exactly to that candle open or close. This horizontal will act as a reminder to me in the future when price does return there. We covered resistance, but equally important is support. Here's a market that's trending down until it finds support. We can see this from price reacting multiple times at this level before a sharp move to the upside. Just like in the other example, sellers are caught at the bottom of this price movement. When price moved away from their trade, they're now trapped, looking to get out if price returns there. The covering of these shorts at this level creates buying pressure in the market, which is what support is. This can give us a hint that in the future, when price returns there, we may see it bounce. So let's mark out the level of support, and we'll wait for it to react to this area in order for us to go long. Remember, we long at support and we short at resistance. Now we can see that the market has tapped the support area and created a bullish engulfing candlestick. Combining the support with the engulfing candlestick is confluence that this trade will play out the way we want it to. An easy way to remember is that support is always below price and resistance is always above price. Multiple rejections in an area also indicate that it is a strong historical support or resistance. However, the more they're tested, the weaker they become. Each retest has a higher probability of price continuing through. So let's get fancy. Supports and resistances do something called flips. Generally, you want to buy at support and sell at resistance. But what if the market is trending heavily and it breaks through these levels? Price breaking through resistance proves that you're in a strong uptrend with lots of bullish momentum. When a resistance is broken, it turns into a new support level. If the market retraces, then this area gives us a better trade to go long. On the flip side, the opposite is true for support. When a market breaks through a support, it's showing strong selling pressure, suggesting it is in a bearish downtrend. Supports, once they're broken, become resistance. When price retraces to these areas, selling pressure will likely emerge from those trapped orders. Notice how we refer to these levels as an area. You should always treat support and resistance levels as a zone or an area, even if we refer to them as an exact number. The market won't always react to the exact same level instantly. It may wick through the area slightly before closing above, showing us a potential reversal. There may be times when your chart gets really cluttered with support and resistance levels. You might think that these are helping you because price does seem to interact with them. However, what you're doing is you're overloading the amount of data you're looking at. Too much data is worse than not enough data. And commonly, with new traders, going from an empty chart day 0, as we progress, our charts get busier and busier, and at some point they begin to hinder our analysis. If you have 50 supports placed close together, it's going to be difficult to decide which one is the strongest and which one has the highest probability of profiting in the long. So my pro tip is that every chart should be started on a higher time frame. Talking about the monthly, mark out those levels as they're going to be more significant than smaller time frame ones. Now drop down to the weekly time frame. In the rare case where a weekly level overlaps with the monthly, I typically just keep the monthly without adding the weekly. However, if you've spotted something on the week that wasn't on the month, then you can definitely mark out that as a new area. You'll also do the same thing on the daily time frame. Be careful once you get lower, or you risk turning into a cluttered chart zombie. As you drop down to lower time frames, you'll notice price interacting with these monthly and weekly levels, but you'll also find new levels that weren't visible on the higher time frames. This will happen, and it's going to come down to your gut and experience as to what is correct. But if you're just learning, lean towards the higher time frames. By doing this practice, you'll keep your chart clean of clutter and avoid analysis paralysis. And you can brag to your friends about having great chart hygiene. A little secret that will help you with support and resistance is the object tree. On TradingView, there's an object tree for every chart. This can help you organize your levels, your drawings, your fib retracements by showing you an itemized list of everything on that chart. You can even organize these and create folders on the object tree. So if we zoom out and go back to our monthly time frame, we can select our monthly levels, and now they're highlighted in the object tree. Right-click on it and select the option to create a group of drawings. Then right-click again and rename it Monthly Levels. While you don't have to do this, this is really good practice and a step forward to having the cleanest charts out there. You can also lock your levels. This can prevent you from unknowingly nudging them and throwing your trades off. You can also hide and unhide them if your charts start to get too cluttered but you don't want to get rid of them. Then we can do the same on the weekly time frame, selecting the weekly levels, going to our object tree and grouping them together, renaming them to weekly levels, and now we have two separate folders containing support and resistance levels on different time frames. Repeat the same steps for daily and however low you want to go. If you've done this, you should now have 3 folders. Organizing your levels like this is very useful, especially for the ADD people out there with cluttered brains like me. Also, this can allow you when looking on lower time frames to be more focused. When things are less relevant, you can hide them. Another useful thing we can do to make our lives easier is by making a template for these levels. So, click on the horizontal ray and go to Settings. Here we can give it a name. You can type in anything like daily level or please don't liquidate me. We can also change the size, color, and style of the text, but for now we're just going to leave it like this. By default, it's a straight line, and we can select it to be dashed or dotted if we want to. That really just comes down to preference. You can also color code. For example, on the daily, we can select this blue color, and when we're done, click on the template button. Here we can save all of our settings and give it a name. Whenever you want to create a new daily level again, you can go in the settings of the ray, then click the template and select daily level. This will help you keep track on your chart without getting overly cluttered. So let's go over an example of how we can use this to trade. Right now, we're looking at Bitcoin. And what we can see here is that it's currently trading to the downside after a steady run up. It's approaching this old resistance area that's been broken through. As mentioned earlier, resistance that's been broken becomes support. So when the market reaches this area, we want to drop down to a lower time frame. Here we can see the market hovering around our support level, showing multiple rejections. We want to wait for it to create some bullish momentum, which we can see right here with this big bullish candlestick that broke the previous high. Now we can enter on a retest of the previous high that was resistance, but now is being tested as support. Stop losses can sit below the swing low, and you can target your next high to the upside as your profit. Hopefully after watching this video, you've learned a little bit about support and resistance and chart hygiene. While these are basic concepts, they are fundamental to success in analysis. Check out some of our other free educational videos if you enjoyed this. Make sure to leave a comment on what you'd like to see next and share this with a friend so they can become a better trader too.